Hello, this is Matt Chart from Investors Hub, and I wanted to do a video update on the gold and silver markets. We're going to look at 5 charts here, and you can find these on my board. I'm going to show you a long-term silver and gold chart, a short-term silver and gold chart, and a gold-silver ratio chart. And so first of all, we're going to look at gold. This is a long-term chart. Basically, we've got you can see I'm just going to focus on the right hand side of this chart for most of this discussion. We've got gold is moving in a rising channel. This blue line is support, red's resistance, and you can see that every time it comes in contact with the support trend line, it bounces from it. So that seems to be a reoccurring trend that we've seen. We've bounced from this line numerous times. We've touched resistance here only twice. But we are headed back, it looks like, to test this support level. Now, if we get a bounce from it, it suggests that the gold trend is intact and we should continue on to new highs. If we were to break below the blue line here, it'd probably signal a pullback or a further consolidation. But right now, the fundamentals are incredibly interesting in these markets at this particular point in time. So I'd suggest that we are going to continue on upwards within this rising channel, possibly for quite some time. We're going to look at a silver chart here. This is over about the same time frame. Silver is particularly interesting because silver, although it has a very similar channel formation, you can see that we've touched the blue trend support line numerous times. We've touched the resistance a few more times than on the gold chart. We've hit at least 5 times here, and you can see many rising trends up and down throughout this overall channel. Now, it's interesting. We had a breakout in silver. We broke some old recent highs around mid $19 range. You see we had a breakout, and then what generally would happen is we'd come up to test our channel resistance area, but as many of you know, the Federal Reserve announced quantitative easing 2, and it looks like what's happened here, particularly important in the silver market, is that it's created a fundamental shift in the technicals. And what I mean by that is it actually forced silver up above its channel resistance. We broke above the resistance, which would have been about mid $26 range. We ran all the way to 31.21. Now, what that suggests is that this overall channel is no longer going to be of much significance. We're actually going to be moving in a new channel, and it's going to be of a higher ascent than what we're seeing currently. Now, silver's recently broken its midterm trend, which is basically the dotted lines. I've used solid lines as long-term trends and dotted lines as short-term trends. So what we're seeing here is a pullback in the silver market, a little bit unlike gold. Gold sort of moves sideways. Silver will always be more volatile than gold, and you can see that is what's happened here. So basically what I'm saying here is that when we find a new bottom here, it's not very likely going to be on our old trend support line. What we're going to see is a increase in the grade of the rising trend. So basically we're going to see something that's more steep, and it's basically suggesting that silver is going to be advancing at a higher pace than what we've seen in basically, the last 20 years of silver moving. We should start to see more volatility in the silver market, and that's mostly to the upside. So I'm predicting a move and advance in silver that we probably haven't seen before, and it's certainly looking like it's going to outpace the gold price. Now, I want to show you the gold-silver ratio chart. This goes back about 20 years. We've got something interesting here. This is the number of ounces of silver that it takes to buy an ounce of gold. And you can see that we've got about 20-year historical support around 45-1. So generally the gold-silver ratio will move to about 45-1. We've been as high here as about 90, possibly even higher than that in the last 20 some years. So in the 2008 stock market crash, when the metals were coming down, we hit a recent all-time low here in the gold-silver ratio at 93, almost 94-1. So it took 94 ounces of silver to buy 1 ounce of gold. And if you go back to the long-term charts, you can see gold here bottomed at 681 and silver bottomed at 840. So it took 94 ounces of silver to buy 1 ounce of gold. Now, what we've seen since the stock market crash, in a bull market, generally this ratio returns to a lower number. So from 2008 stock market crash, we've come all the way from 93 to 1 to 44.53 to 1. So that's suggesting that silver is advancing at a rate twice the price of gold in the last 2 years. Now we've got this long-term support here, 45 to 1. For those of you that are familiar with the gold-silver ratio, historically the gold-silver ratio has been about 15 to 1, 15 to 1 to 16 to 1. And what we may start to see at some time in the future is this 45 to 1 support is going to get broken, and we're going to see silver prices start to advance and return to that historic 15 to 1 ratio. It may only be for a brief period of time. It happened around 1980. It happened in around 1929 or 33 during the Great Depression. And as these metals seem to return to monetary value, that ratio comes closer to 15 to 1. And we're currently at 45 to 1, so we certainly look like we have a long way to go. Now you can see that during the accelerated move here in silver particularly, we went from a ratio of about 65 to 1 all the way to 45 to 1 here. And this is a weekly chart, so each one of these little ticks here is a week in length. So it took a few short months all the way to change that ratio from 45 to 1 to 55, from 65 to 1 to 45 to 1, and we've hit our target, and now we're starting to have a bit of a pullback. So I put a post here on my board. I'm just going to show you this. It was on November 6th. I stated that silver would hit $31.11 an ounce, and I suggested that we'd see $1,400 gold and a ratio returning to 45 to 1, and we'd see that $31.11 ratio, $31.11 an ounce price. And if we take a look at our silver chart, we hit 31.21, so it was 10 cents off, but fairly close and accurate forecast. You see, after we hit the target, we started to have a pullback. Now, actually, I'm going to show you the gold short-term chart. This is important because what we're seeing here in gold is we had a breakdown. Basically, we follow this trend support line. It pushes the prices up, and when we violate it, we need to see a move in the opposite direction. Usually it's sideways movement or a pullback. What we're seeing in gold is we're seeing a sideways consolidation. We're moving between about 13.15 or 13.20 and about $1,430 an ounce. We tested this 3 times. They call it a triple top, and you can see that we've got price support here around 13.20, 13.15 to 13.25. Looks like a possible support here for gold, and we're coming very close to that. And if you look at the long-term chart, it also suggests that we're coming very close to ending the consolidation when we test our support line. So gold ran upwards for about 3 months, and now we've had a nearly 3-month pullback or correction in gold. So generally stating, gold is leading the market. Gold is going to give you the signal before silver, and you can see that the gold breakdown happened here around November 15th, and on silver we had a breakdown here just in early around January 2011. So gold prices continued to advance while gold was consolidating. So that suggests that silver is going to have a shorter term consolidation, but it's also going to be more volatile. We're starting to see a clear pattern of lower high points pushing the silver price down. We had some support here at around $28. We've broken below that. We kind of bounced from it, fell below it. And if we go back to gold, I've drawn in here in these green lines, they're Fibonacci retracements. Each Fibonacci retracement, now for those of you unfamiliar with Fibonacci retracements, they're retracement levels, psychological retracement levels that stocks and commodities, anything will tend to follow. These are general retracement levels. Generally, we usually see a 38.2% retracement as the first retracement level, which is coming in at 13.2566, which is also very close to our price support. Now, considering gold is less volatile than silver, we're probably going to see less of a pullback in gold. And it looks like we may be coming down to near a bottom in gold, whereas silver, our silver short-term chart suggests we've got a little bit farther to fall. Silver could come down to, now our Fibonacci retracement on silver is 2608. But if silver is more volatile, it suggests we're probably going to have a bigger pullback. Now we do have price support here around $25. You can see it was resistance. We tested it twice here, and then when we broke above it, we use it as support. So that's particular significance because we've tested this level 3 times, either as resistance or support. So it suggests that if we're going to see a pullback, we should come back and test this level again. And it's also around our 50% retracement level, which is the next retracement level coming in at 24.49. So that may be a very likely support level here. Something else I want to talk about in the markets here are if these pullbacks do occur, where we're going to go after the consolidation is done. Now in gold, this is something called a measure move. It generally suggests that when a stock moves a certain percentage after consolidation period, which is what we're experiencing now, the next move will be about the same percentage. So if we take a look at our gold short-term chart, we moved from $1,155.90 as the low all the way up to $1,430.60. That was a move of 23.77%. Now if gold comes down to $1,320, which is looking like a very strong support area, it's showing on the long-term trend and also on the short term as a price support. That would suggest the next move in gold would take us up to $1,633.74. And we could see that in the next 3 months. Silver, since it's more volatile and we are seeing almost a explosive move here, what we could possibly see in silver is we've had a move here from $17.77 at the low, and we ran up to 31.21. So that gives silver a move of 75.63%. That's quite significant. It only took 4 months for silver to move 75%. And we could see if that pullback here does come around to $25, the next high in silver could be $43.91. We could see $43, $44 silver in the next 3 or 4 months. Now, something else here has to happen in order to see that move. This gold-silver ratio needs to break below our historical support line. Now, in the silver short-term chart, you can see that silver is now starting to advance at a rate faster than gold. We've broken out of our resistance channel, and we're going to start to see, very likely, an accelerated move in silver prices. So for the first time in a very long time, we could start to see silver prices break below this support ratio of 45:1, and we could start to see for the first time in 20 years silver prices start to advance at a faster rate, and we could start to see the beginning of a move back to the historical ratio of around 15 to 16:1. So I think this is a very significant point here. We may see this ratio in the pullback come up to maybe around 55:1. You can see we've got price support here, or ratio support. You can see that we kind of had some support here back here. There was a recent low here, so you can see that we're kind of having this reversal off the support. We could come up as high as here. We could see a 55:1 ratio again, and then the next bull move is going to bring this ratio back down, and we could see a move below this 45:1 ratio, and we may not ever come back above it for a very long time. So it's very important. So watch for that gold silver ratio, and that's basically my analysis. I hope you enjoyed it, and feel free to stop by my board.